Good morning, everybody.
Happy Monday. You're welcome back to another edition of Real Estate Backstory. This week, every week, we actually go through the underbelly of real estate and tell you what's going on in our industry. And normally, Alan makes the announcement.
There
So,
we
but
go.
today he's multitasking, so I'm trying to help him out a little bit.
That works really good.
Hopefully, that y'all had a little bit of rain yesterday and a little sunshine this morning, and I think it's going to be off and on today. But, anyways.
Well, welcome. We appreciate you taking your time with us every Monday morning when we do this. And so we kind of wanted to start off talking today about kind of like what's happening and what's going on this time of year. I mean, we are moving into the summer buying season. And normally here in Georgia, that is the
It's a premium time for buyers right now and agents. We normally are busy showing. While most people are on vacation right now because kids just got out of school. We'll have quite a few folks are on vacation. This is normally a very busy time for all the real estate agents. But what is the market really doing right now, Alan?
Well, I mean, the market really is good, but like talking about summer, we'll sell on average. We sell more homes over the next 3 months than we may sell in 6 months out of the rest of the time of the year. And so we're heading into the really, really busy season. And I know that there's all sorts of news and information out there, and sometimes we get in our own head.
There's so much chatter out there right now.
I mean, like you have to understand that if you aren't busy right now, it's probably you. And I don't want to be mean about it. I'm not trying to waggle my finger in your face kind of thing. But seriously, like don't tell me that the market is not good. Don't tell me that, well, you just don't understand, Alan. Yeah, I totally understand. We see how many transactions are going on right now. We see what's happening in the industry. And so, our total transactions down? Yeah, we're down, but we're not down we're down from the last 2 years, but we're not down compared to where we were in 2017, 18, 19. We're up from those times. And so, yeah, we know the last 2 years we're outside the norm.
There were unicorns.
And so where we're at right now, I'm just hearing people that have taught themselves into out of, I guess, yeah.
Business. And I will tell you, some of my producers, they don't allow those type of thinking infiltrate their mind. I have agent calls me on holidays, weekends, inquiring about special stip just because it's something beyond them. And for those, agents, I answer my call just because I know they're out hustle and bustling it. And, not everybody's in a season right now to just go full board. And I understand that. But those of you who are treating real estate as a business, I can tell you right now, get it while it's hot, because if
now's
not,
the time.
Take, our down season in winter. So take time off during that time. But right now is a hot summer and is the season's hot. So
yeah, I mean, it's not just the temperature that's starting to increase now. Yes. Okay. So like seriously, be active right now. Pick up your phone, start calling your database, reach out to your clients. Now's the time to really jump in there.
We just had a first-time home buyer seminar this weekend with Wildfire Mortgage Team, and I will tell you, it was very informative. The buyer loved it, loved the information. Yep. So, anyways, back to you.
Now, on the positive side here right now is that to begin with, mortgage rates are coming back down. We had the last 4 weeks, they've been going up largely because of the debt ceiling. The debt ceiling battle is finally over. And so now this week's drama is the Fed Reserve, the Fed meets this Wednesday. Okay. On Wednesday, they're going to decide, are we going to raise the federal funds rate? Are we going to keep it steady? Are we going to pause it for a month? Are we done with all the raises? That kind of thing. And so, the bond markets, because mortgages are, the 30-year mortgages part, directly tied to the bond market. When and if you look at the 10-year treasury, it matches up to the 30-year mortgage rates almost line by line. But right now we got a lot of fluff built up into that and into that spread in there. And that's really where inflation comes into play, as well as when the market's trying to feel like what's really going on. Is the Fed really going to pause it? Are they not? Those kind of things really do, as weird as it sounds, those affect mortgage rates a lot more than the federal funds rate. Matter of fact, normally when they raise the federal funds rate, the rates dip a little bit. So, they're not directly tied, but they are definitely indirectly tied. And so this week we are looking at mortgage rates that are going to be kind of softening and going, heading in the correct direction here now. What happens with Wednesday? That's all a battle to fight inflation. And we know that as inflation lowers, interest rates will go down as well, because interest rates are directly tied to inflation. So, and on that side of things, that's a good place for us to be on there. So now, one thing that we are, I guess, conscious of is what happens with student loan payments, because part of that whole debt ceiling battle was that something came out was that, and I'm not trying to be political about it. This isn't a yay or negative thing, positive,
but it does talk about what it impacts.
Well, and this is a reality, right? And so, student loan payments, we haven't had to deal with student loan payments for goodness, what, 2 years now, kind of thing? Yeah. I mean,
during pre-pandemic,
from pandemic on,
yeah. So it's been over almost 3 years now.
Right. And so, that is about to change. And so that's something that, coming up later this year is when we're going to, student housing is going to, or student loan payments, thank you, I believe it's in September, are going to start back. And so the lenders are now having to factor those things back in. And so, like as that happens, that's going to be an issue for some, especially for our first time buyers.
Well, it's because
that's the potential to be an issue.
Because of debt to income ratio. So, and probably 6 months ago, that wasn't even consideration because it wasn't in the radar, but now it is on the lender's radar because, at the end of the day, as I talked this past weekend, was that lender look at any qualified buyer as a risk assessment. So if it looks like the debt to income ratio is too high, that they're not able to take care of their primary resident, the loan is not going to be approved. So at the end of the day, what does student loan impact? It impacts their monthly expenses. So the debt to income ratio has to meet.
Now the market's not expecting a big feeling or for this to be a big, impact overall. But if you've got first time buyers that have student loan debt, this is suddenly going to be an issue that maybe even if they got pre-qualified a few months ago, that pre-qual may not count now because now the lenders are having to build in student loan repayments. And
your lender should be your best friend, y'all, because the lender is not there to stop a loan. Mm-hmm. They want to give as many loans as they potentially can within a guideline. So please don't think that they're against you.
But also
they're there for
what else
you.
Can we do to be more creative, right? And so can we, are there down payment assistance programs that we can assist them with? Are there any other options that they have? Is a USDA loan, are they looking to be outside of the normal area ranges, that kind of stuff? So like don't just give up on that kind of stuff either.
So if you have someone that has like 4 different student loans, ask them to consolidate, because when you consolidate, the monthly payment is actually less than the 4 individual payment as a whole.
Yeah.
So there's always a hardship consolidation on student loan. Talk to your lender, because most your reputable lender know how to work that.
Yep. Now, some new information came out and it really does contradict itself when you look at it on the surface. And so we kind of want to point this out, is that first of all, investor home purchases are down by almost half, by like 49%. And so
in the first quarter.
Yeah, in the first quarter of this year, the number of investors buying homes has really I mean, we're talking about a substantial drop, which on one hand, I'm really glad to see, because investors tend to buy a lot of entry-level homes. They tend to buy homes that are a little bit on the lower end of the price range. And we have a lot of demand for properties in that range. So the fact that the investors aren't buying as much, I see that as a real big positive.
Well, what it is that they gobbled up a lot of first-time home buyer and they're actually renting them out. So their return on investment is really good right now. But at some point, that rental rate versus what the value of the property is going to be right there.
Well,
And it'll be more administratively costly to manage those assets. At some point, they may start selling some of the products.
right. But the contradiction comes is that at the exact same time as investor purchases are cut in half, the share of US homes bought in cash has reached a 9-year high. And so, like, okay, what's going on here? Why are all cash purchases going up, but investors are not the ones doing it? In the past, when we saw all cash purchases spiking up, it was because that was driven by investor purchases. And now what we have is all cash, but it's not investor purchases, right? And so we have folks that have been sitting on a lot of equity that suddenly are now, and we've seen this already, that the boomers are carrying a lot of power moving forward into the purchase side of things.
And what happened is that during pandemic, we have 20% increase in property value. And for us, like example, when we bought our first home here about 21 years ago, what we got out of it at the end of the day was double the price of what we bought it for. So therefore, not only we have paid down all these loans for the last, 20
For savings,
yeah. And then now we actually have double the equity of what we bought for. So therefore, it's very easily for the baby boomer to take whatever they bought before and buy the next property in cash.
Well, and to throw the next wrinkle into this equation is at the same time, so we've got more cash purchases, less investors, but for the folks who are buying, FHA loans are now their highest level since the pandemic. And so we have more FHA, and we're seeing this at the brokerage level too.
MBA too.
Yeah.
Both of them are.
So FHA and VA loans are both. And so really what we're trying to highlight here is that like the market is figuring some things out. We know there's a lot of price pressure on our market, and whether we're talking about the price of the homes or the financing costs, that kind of thing. So the fact that we're seeing more FHA, well, FHA requires less money down. Sometimes FHA loans have a lower interest rate, and now that they've lowered the MI, that really kind of assists that
tremendously.
But we're seeing more FHA, we're seeing more VA loans, that kind of stuff. And so overall, that's we have to be more creative, and also as if you're a listing agent, don't poo-poo FHA loans
or VA for that matter.
Yeah, because they really are. So overall, the share of buyers purchasing properties without a mortgage is up across the US. We have more, but these aren't investors. Like in the past, it was very easy to like, oh, this is the investors driving our prices up. That's not it. No, we have a lot of buyers that are able to forego a mortgage kind of thing. And so, and so we do have a lot of buyers waiting in the wings and waiting for rates to come down. So as rates come down, that's going to put even more price pressure on our properties here. And so here in the Atlanta metro area right now, overall, the share of homes using all cash sales is actually down in the Atlanta area. And that's because we are one of the top 3 markets for total investor purchases, right? But that being said, we're still 37% of all homes purchased here are all cash still. So that's a significant
We're shifting the buyer type.
Yeah, we really have been, kind of thing. And so share of homes, properties with an FHA mortgage is at 22% almost. That's up 9%. That's a really significant. I mean, we've seen FHA sitting in the 12-13% range, being up into the low 20s. That's significant. 1 out of 5 now is really kind of doing that. VAs hold a lower percentage here in Atlanta, 6.5. That is up a point as well. And so we are seeing more of those products going on here in the Atlanta market. But because we have such tight inventory right now, we are seeing, and so this is CoreLogic, and they shared out what's going on a national level as far as overall pricing.
And this is national level, not local.
It is, but the interesting thing is that nationally, like prices for the month, property values for the month are up 1.2, and they're predicting that the total for the year is at 4.6, which is very healthy for our entire nation. And so we're seeing where Atlanta has been holding strong, Georgia has been holding really strong, we've seen several markets in the US that have taken some price cuts, but not in Georgia. We hadn't seen it happen in Georgia. Now the rest of the country is actually catching back up. And so if and we have to battle a lot of this fake news. And I hate using that term because it makes it sound political.
Well, it's
But
not fake news in their own perception. You got to understand what the basis
yeah,
of what their news is derived from. Just like the more like foreclosures up 200%. Well, yes, absolutely, because during pandemic we have foreclosure moratorium, and we may have 2 foreclosure.
yeah.
Let's say it's up to 6 now. Yes, that is 200%. But if you look at the units, it doesn't make sense.
Yeah. So overall, they also released the top markets at risk of home price declines. Guess what's not there?
Atlanta.
Georgia, Atlanta, not made the list, any of that kind of
So
stuff.
I see a lot of Florida, especially Lake Lane, Winter Haven area. No, Sarasota, Jacksonville is still pretty hot.
Yep. But right now, one of our biggest challenges is continuing to be housing inventory. Housing inventory is the thing that's hurting us more than interest rates right now, is inventory. We don't have enough homes to sell. And so like right now, new listings for homes is down by a quarter, 25%. I mean, if you just look at the graph here for the last 4 years, and by the way, if you go take this thing back farther, this is our lowest inventory, lowest number of new listings ever this time of year. This is the time of year when our listings normally spike up because everyone's trying to sell for the summer buying season. They're not spiking up. We have a real deficit of homes in the US right now, and it's hurting us. And overall, guess what? We actually have less total listings also are down by 5% year over year. So, you can see what's happening with the trends here. Our total listings are really low. Our new listings are even lower. You factor in a 25% reduction in new listings, and we're already down 5% in total number of active listings. That is not good for us. We need more inventory. Right now, we have buyers that are starting to fight over properties again. And so it is definitely we're strongly back into a really strong seller's market here because we are seeing overall pending sales down, but it's not down as significantly as it has been. Okay. Those numbers are starting to level off. We still see a third of our sales are a third of our contracts are properties are under contract within 2 weeks. And and a third also are selling above list price. So like good properties in good areas, priced right, are selling quickly.
Moving condition.
And so the inventory for that is really, it's causing a lot of tension in our market. And honestly, we kind of worry that we'll see prices jumping back up in the double digits again, just because we don't have enough inventory. That's a real concern for us, right?
It is concern, but I think it's all derived from interest rate because once again, your monthly payment has to be a certain amount.
Yep. So at the same time, rents are posting their largest drop since COVID, basically. So rents have been coming steadily down since 21.
Look at it, it's almost not quite, but it's almost back to where pre-pandemic is. You're a couple bases off, but it's almost, but you can look at during the high February 2022, that was the highest level there was.
Well, it's been, but part of that is there's now, we've been, single family building really slow, but what didn't slow was multifamily building.
Correct.
So there's still just tons, especially even in our area, tons of new apartments that are under construction. So, it's kind of reached that tipping point where we are seeing apartment rents really starting to, vacancies are increasing. And as vacancies increase, we're seeing rents drop. That actually is good on a national level because that means that that's going to help our inflation on that side of things, because rent does take up a big piece of that as well. Now, the other area where we're having some major risk is in the office, is in commercial real estate in the office category. Offices, 20% of office space across the US is empty, vacant.
Yep.
1/5 of all offices are vacant. And there's a real shift going on between, there's a lot of employers that want the employees back in the office, but just what do the employees want to do, Ming?
They want to work from home.
Yeah, they really want to do it. So
it's easier for them on gas. It's easier, more convenient. They don't have to dress up. They can get equal amount, but this would be someone that is motivated, is self-starter that can maintain a workload at home. Not everybody can.
Well, but that being said, it's just that if you're looking for a commercial, like where's some good opportunities to be found right now in the commercial
Office
sector?
space.
Office space is really the place. So
Correct,
if you have investors looking to really find good deals, it's going to be an office right now.
correct.
Now, this week, as far as on mx1training.com, so tomorrow at 10 a.m., we have our monthly sales meeting. That's going to be in person in all of our offices. I'll be sharing the most up-to-date economic data, as well as, what's happening in the market, that kind of thing. And then on Thursday, we have Protect Your Investment with a home inspection. That's going to be over at our airport office at 9:30. So, gosh, we hope you guys
This
have.
was quick.
That was quick. Yes, very much so. So thank you guys. If we can be of any kind of service, please call, text, smoke signals. Hope you guys have a great week.
Thank you and have a great Monday.